Welcome, and here we're looking at the Dow Jones on a daily chart, and the market's still trading, so I don't have the data for this end of day program. But essentially, we're looking at the 15,000 there, and the move overnight brought us down to the 15,000, well, close to the 100 there, which is very close to this particular trend line that we're chasing through here. So there is going to be some sort of support here, and as you can imagine, there will also be some consolidation in this area here as well. Also, what we've been looking at as well in terms of wave counts, I'll just run through two of them. Essentially, we've been looking for this move up here to be in 5 waves up through here, so we can just put an impulse wave through to there. And then we were looking for an ABC correction to come back sort of roughly into there. The norm would be the 61.8% for that, and that would sort of bring us in pretty much on the 15,000 there. So that's what we were sort of looking for there. From that point there, we're looking for a move to the upside here. Okay, now we don't have any evidence of that just yet, so we need to wait for this to unfold here and complete, and I don't think it's going to complete until early next week. The other thing here that I wanted to point out here too in terms of the trading levels is that this particular move up through here can be the classic trading levels pattern. It probably sort of shows up better on the S&P 500, but the same thing for the Dow Jones across the 15,000. So this is the S&P 500 here, and we'd be looking at 1650 here, the medium level through here. So in terms of the trading levels, this could be a larger pattern unfolding here, because with the trading levels we have well, the first thing with the classic pattern is we have the arrival to a particular level, and then we have the 3-wave structure from that point, and the same as the Elliott really. Then we have the first high up above the level from that point, and then we have the ABC correction, which normally I find the distance above here is normally the distance below here that we'd be looking at. So it is possible that we can have this larger correction unfolding through here as well. So we need to be mindful of that, because the count that we're counting down through here at the moment, even though we're counting it as a corrective move, it also can be counted in 5-wave structures as well. So if we get 5 waves here, then we'll get a counter trend here, and then another 5 here. So we, as traders, we need to bear this in mind as well. In terms of navigating through this, there will be certain points where we can say, well, the bias is this side, or then this is confirmed here, and so forth. But we just need to keep both of these counts in mind here. So one of them is heading up like this, and the other one would be heading down like this. So this particular first move up through here, when it actually starts, one will be in 3 waves like this, the other one will be in 5 waves like this here. So as you can see, the beginning of the structures will be the same, because they both go up through here, and they will also be in the same intraday as well. They'll both be a little 5-wave structure there and a little 5-wave structure there, and then they will both have a little ABC correction through here as such here, and in fact they'll both be pushing up too as such as well. So they will have, even up until this point here, they'll still have the same. They'll have 5 here and 5 in the next one as well. But it's only until we get to here that they'll sort of separate somewhat. So there's still a fair way to go for these to work through here. So we'll be monitoring both of those in the day ahead report. So just remember those, and we'll see how we go from that point. Because in the 5-wave structure to the downside, let me just get this drawing tool here working. because in the 5-wave structure that would be wave 1, that would be wave 2, and then we would have wave 3 down here, and wave 3 would be the 1, the 2, the 3, which is not finished here just yet. Then once that is finished, well, say from there's okay, and then 5 down there, so that would give us this 3rd wave here, then a 4th, then a 5th. So that's a real possibility as well. So we need to work through that. So at this point here, this is where it sort of changes, from here. So this move that's moving down here so far as well, as you can see, I think one of the main things to connect with is the fact that these were quite small and they're getting larger and larger, so it is expanding to the downside. So normally I can take the middle of a particular structure, the most powerful point in the structure, and that can be the halfway mark. So we do need, as I mentioned before, we do need to be mindful that if that's only half the structure, then that's going to be the other half to it here. So and this other half here will be a bit like this one here, but because we are getting into the 15,000 area here, then it's going to get a bit bouncy from that point there. So just drilling into this little section here, we can still see that it's got further to go down. We've got a very nice corrective pattern from here, an A and a B and a C wave to here, which would be a little wave 4. Then we've got the 1, the 2, the 3, the 4 and the 5 to here. So that's kind of completing a certain amount of that structure to the downside here, but we can see that it's still on the close, it's still ready to go down, the 1, the 2, the 3, the 4 and the 5. So it's still got further to go down, and that's the same with the S&P 500 as well, coming down into the 1650 area through here. So it's not finished yet as such, and Europe's pretty much the same as well. Yesterday we were looking at shorting from the resistance at 6620 and then adding on the retest of the 6600 here and exiting at the 6500 here, but this has still got further to go down as well, even in terms of the structure that we have here, which we were looking for the A, the B and the C wave here. The C wave here is always, it's always in 5 waves, but it can move down further as well through here. So if you've been playing in that market, there's still more to go. So we've pretty much got the get this drawing tool working. So into the 1 and the 2 into here. So this is all the 3rd wave here, the 1, the 2, this is still all 1 and 2 in here, this is all the 3rd, so there's still more to play out through here for this to finish to the downside, into this sort of area through here. The Australian market, I'll just see if I got a bigger picture. Okay, this is one that we're looking at yesterday, and what we're looking at yesterday, just this little drawing tool working. I've got to hold down 3 keys at the same time. So we're looking at this as being an impulse wave 1 and 2, and then 5 waves up here for the 3rd wave, and the 4th wave would pull back 38.2% or to the wave 4 of 1 lesser degree, which is pretty much just below here. So we'd still be looking for one more to the upside here. But of course I wouldn't count on that because not just because the US markets are down, but because the FTSE's down as well. And I know there's a strong relationship there. And also too, this move up through here, this wave structure to here, if we get a breaking of that, if that market goes through there, then that's overlapping wave 1 here, and then we would have to call the wave 5 in through up here. We'd have to call that in from that point there, and then we'd be looking for a larger structure to the downside, as I mentioned yesterday, because we've got the wave 1 here, the wave 2, and the wave 3 to here, the 4, and the wave 5 is normally the same length as wave 1 if wave 3 has got the extension in it, which obviously it has. So once again, we would be looking for a larger sort of pattern to unfold across here, this at minimum, and even when we sort of arrived here, we mentioned that the swings would get bigger, and this is a part of that process unfolding. So it needs to swing out, and then it will diminish and swing in and find a price point, a balance point, and then work the next trend from that point. So we just need to be a bit diligent here. So the breaking of that high here, which is around the 50.80, and the 50.72 would be really important as well, so that is resistance. So so further to move down. In terms of moving down, it's a bit like Trendline City here, but there's a couple of things here, is that it still can be a wave 4 coming down, wave 3 up here that we've been counting, all the way up through here, and even this is a clear wave 1 to this point here from this low here, so that's not a problem. That's not a problem. Wave 2 there, nice ABC textbook stuff. Third wave moving up very nicely, and the fourth wave, look, this block here is the main support area. So really, a breaking, changing this from support to resistance, that 5100 there, will just add more bias to the negativity to the downside. And if we were looking at the downside scenario, then we would have to look at this as wave 1, and this is wave 2 here, and then wave 3 unfolding down through here. And in wave 3 unfolding, that would be the 1, that would be the 2 there, and then that would be the 3 to there, because that would be 1, 2, 3, 4 and 5 to that point there. So there'd still be the 4 and the 5 to complete this third wave through here. So the wave 4 that comes in here will be, wave 4s are always sideways and complex, but that basically gives us an A and a B and a C down to here. So if it pushes up from here, then we know that that's the wave 4 and we know where we are, and that's pretty much in line with the wave count we've got on the S&P 500 as an ABC pulling back as well. But if we see a lot of consolidation in here, and then a bearish picture unfolding there, and if we do get 5 waves down from this high here and overlap the 50 and 80 in this little area here, then where's my little picture from before? Let's see. Yeah, this one here. So if that does turn into 5 waves here, we get the break of the 50, 80 and 72 and all the rest of it, and we get 5 waves down here, then we get 3 back up here, and then another 5 here, and normally the distance above here will equal the distance below here as well in the swing. So that's what we would be tracking. So that will become clear over the next 2 sessions really. The other point is that Thursday we expected as a bear day as part of the weekly cycle, but we also just going to have a look at the volume on that, but we also expect Friday to be positive on those notes, so we do have more selling volume on that Thursday here. So you can see that on yesterday's bar here, we've got more volume and it closed lower, so that is a sign that sellers are in control of it, and obviously you got your little doji there and whatnot. But let's just see how this unfolds out. You can see here on the cash market here, this move up here we're calling wave 1. So on the cash market, if the 50-80 goes, breaches, then the wave count changes from there. But as long as it stays above there, then we can still have another push from this area here to the upside. But if that breaks through here, then that puts the top in through here, and then we've got the bigger picture to the downside. Alrighty, let's have a look at commodities. Okay, starting with gold, pretty much on track, and we've got that nice strong push to the upside there as we've got the US dollar sharply moving to the downside and treasuries to the upside. So all sort of working quite nicely really. So as you know, if you've been trading this market, we're looking for 5 waves up. We've got wave 1. We're looking for an ABC to come back as wave 2. It is plausible that, by the way here, is that we've got this as the A, the B and the C here. It's also plausible that this can be the A wave, the B wave, and the C wave into this area here, but I'll count it like this just for the time being, because we're looking for a larger third wave to the upside, and the wave 3 will be, just be much bigger. So this is like wave 1 here, and this is wave 1 here. Just it's 60% bigger in the ratio department. So, but anyway, look. So that's all moved up nicely. One thing we've got here, we've got a nice support here in the group 1 zone here, so that's nice and solid. So that sets the platform up, the precedent for further upside here. So of course it didn't stop at the 1350 here, and I don't mind that because we're in wave 3 here of wave 3, so it's the most powerful point in the Elliott structure, a bit like over here, that little powerful point there. So that's normally where you get gaps, and that's what all the Elliott traders look for. So yeah, so looking for wave 1, wave 2. So wave 3 and 4 will play out through subgroup 2 here. So we can expect, because that was simple and sharp, we can expect this one to be sideways and complex, and then moving up. So the target would be the 1400 up here. But of course, it's just, it's going to be some not even volatility really, but just choppy price action through here. The copper market is pretty much the same as well. Now it just got a little bit more complicated through this particular pattern through here. I was hoping that we'd get support on top of this micro group 1 up here, but it wasn't the case. And it's possible to have this particular wave 5 here, but I'll need to go back and check everything just to make sure. But the main point is that in terms of trading levels, that 330 there is still the tested support, and it's going to take the same pattern as gold to the upside. So there's still more up here, and we're looking up at the up this area anyway for for our target, even higher up as well. So, but look, anyway, positive on base metals. That's the important point as such. So we've got gold being precious metals and base metals being positive, which is important for Australia and important for what's actually happening in the market overnight with the indices coming off 1.5% and so forth. So this is the oil market here, and as you know, we were looking for our little A and B and C here, and it does appear that we've got 5 waves up through here. The most important thing here is, from trading levels point of view, is the 106.50 being the support here, and I kind of like it because it's moved up and it didn't retest it here, but it did it from up here. And as I mentioned yesterday, coming up through here, there's a couple important numbers. 107 is important, 107.20 is important, and also 107.72 is important as well. So that's cutting in there. So everything's sort of going according to plan. So I would expect this market to move higher, to make new highs above the 108 there, and then fold back into it as such. And another reason to sort of confirm that is this price action in through here. I'll just see if I've got the chart sitting there. This will do. It's not labelled, but it doesn't really need to be labelled as such, because what we can see here is we can see a nice ABC correction. So we can see this A, B, and 3, a 3-wave structure. Now, if you get a 3-wave structure, then that top's going to be taken out. Yes, it's also true that whatever happens in here can get a bit more complicated, but it will still make a new high because we've got that 3-wave structure there. So that's one of the beautiful things about Elliott, is that understanding that 3-wave price action really gives you an opportunity there. So all you need to look for is the closest largest number. Well, that's the 107 there. So in this particular case here, the 107.20 is support, or the 107.30, the top of group 1. If that can establish support on on there as such, then once you can recognize you got support, then you know you get to the 50. And in this case, if you can get to the 50, it should continue up higher through here. But of course, there will be the arrival, the reaction, the correction, then support, and then you'll be up. And, the group 2 up here, the 65, 72 and the 80 will be in your way as well. But you can have the faith that because of this particular price action here and the market being up here testing highs, it will break and move higher from that point. The corn market has pushed up as well, so that's pretty much in line with what we've been sort of looking at here for the wave 4 scenario. That's right. I just wanted to point out the wave 4 in textbook would retrace 38.2% of the third wave. So that's all the third wave there. So that makes it doesn't. It makes it lower here. I must have too early in the day. Anyway, look, close enough to it's just below the 500. So it's, in there. So that's the fourth wave of 1 lesser degree there as well in a certain case. So I'm mindful of that. But anyway, above the 72 is important, and this is what we're drawing out yesterday. So we don't need this. But also I want to point out this particular move up through here, even though I've got that there, I wouldn't don't be sold on that while the market's above the 72, and it may retest it still as well in terms of coming back and testing it, or it might just find support on top of the 80 here, and if that's the case, then it'll move up from that point. But this here, that move there is like a third wave because it's really strong, isn't it? So in one way or another, we got some sort of 5-wave structure unfolding through here. Just Look, the other thing too is that we're in wave 4, so far the wave 4s have been reasonably, even this one, been reasonably simple, as in 3 waves. So hopefully it will be simple, but it can also be complex as well. But even in simple terms, if it's a wave 4, we'd still be looking in 3 waves. We'd be looking for something like that. And it may even get more complicated like this here before we see any further downside here. So just, we need to be mindful of that. And also too, if we find a solid support on the 500 here, if it will trade above it and come back down and do all sorts of things, it may be simple, complex, but if we can see that really establishing support here, well, then we need to look for long trades, because in terms of analysis is one thing, trading is another. And from my point of view, is that apart from all the pretty patterns, you need to know where the demand and the supply is in the market, and if it's showing you that it's something that it is in place, then you need to be on the right side of the closest largest number. So I certainly don't mind changing my mind about certain things, because the trading is more important than the analysis. New traders tend to think the analysis is more important, but that's just a guessing game. When it comes to trading, you need some hardcore facts to trade from, and support and resistance is a simple one, and sometimes simple is good. So there. Said. Okay, let's have a look at FX. Just starting with the US dollar here, and this is just a daily chart, and what I want to point out here in terms of the trading levels is that, this is 80, which is the major trading level, and then we've got group 1, which is 1, 2 and 3 here, and normally what we find is that the pivot in group 1, the number 2 here, if that becomes a retested resistance, then the price is normally associated or still has a relationship with the 80 to deal with. If it found support on that, well, then it's got the opportunity to move higher. Support on top of this level here, then that's a different kettle of fish. Would see further upside from there. But having that retested resistance here in terms of the trading levels into the pivot, the number 2, creates a a bearish environment here. Technically, in terms of the Elliott structure, it's fine where it is at the moment. But if it takes out this low here, then in Elliott terms, then you've got a bearish structure happening here, because we were counting 5 waves up through here, and we were looking for an A and a B and a C to come back through here. But if it takes this low out here, then that takes that away as well. Yeah, we have seen a strong sell-off from there as such at the 82 here. So through here you can obviously see there, so that low there is really important. But even being this far down is a bit of a shock. So we need to look at the wave count here, and also in terms of the euro as well. And of course it would affect the other currency pairs as well. Just bear with me while we get the intraday one here. So the 82 here, just drilling in on the 30-minute chart here, we're looking at, it does appear to have 5 waves to the downside, maybe not completed just yet, because we have wave 1 into here, the 3rd wave is here, and this will be a little 4th wave developing through here, the 5th wave here. So it may stay here, but after it finishes its 5 waves, it will have a bounce and then another 5 down. That's why I'm thinking that this particular low here can be taken out, and then we've got a bigger bearish picture. So just bear that in mind, because what that will do is that will flip the euro around to the other side as well. So when we're looking at the euro here, I'll just stay within the 1 hour chart here for the moment. So what we can be looking for here, and we can be looking at 5 waves down to here, then an A, then a B, and then a C. Now that's an expanded flat correction where it takes out the low here and takes out the high here. It's a bit of a bear bull trap, as they call it. But this type of price action normally happens in wave 4, not so much in the first wave of wave 1 and 2. But it is probable, and then we can continue further to the downside here. So that's one count that that we can view as such. And this move up through here, I'll get to that in a second, actually, that particular move. But the other move for this too, the other flip side of it, and especially if that low in the US dollar gets taken out, then this would be an A wave down to here, a B wave to here, and a C wave to here. So essentially an A and a B and a C. And while it's sitting above group 1 here, the 133, well then to me that's a bullish sort of act. And it's kind of bullish anyway, because we're above the 130, which is the minor level group 1, and this is subgroup 1 here. And obviously these are all the micro levels in between each whole number through here. Now, this move up through here, if this is an A and a B and a C, then this move up here would be wave 1 and would be looking for 5 wave structure in through here. But that can also be the same as the other count as well, where we had the expanded flat, the down through here is wave 1, the A, the B and the C here. That would also be in 5 waves. So they'll both be in 5 waves. So once they've finished their 5 waves, then it will move down. If it's a bearish thing, then it'll eventually move all the way down. If it's not, well then it will be this structure here. But even in the first structure, in both of them, they will both move down like that. They'll both have that pattern there. So we won't even know until that. We'll only know once that's done. If this pushes up through here, then takes out that top, then that would confirm a much stronger bullish market. If it only comes back up, a certain way here and then moves down here and gives us 5 waves here, then we know that we're on the right track here on the bearish side, and would be looking for an A and a B and a C, and then further to the downside there. So there's a point of recognition of change in direction here. So it'll be at this space here. So that may come on the Friday. It may come on the Monday as well. So just depending on how what develops as such, and but so bear that in mind. So once again, we can use the 133 here as tested support for long trades, or resistance for short trades. All you need to do is allow the market time to fall into place to confirm this level now as support or resistance, and then you can get a nice trade, a strong trade in either direction. So it will move swiftly. The Australian dollar, it's still in its thing. And I also want to have a look at two wave counts here, and I've probably mentioned them before. We've got our triangle pattern here where we've got our A wave, our B wave here, our C wave up here, and we were looking for three waves back as a D wave, but we really wanted the D wave to come back into the 90 area here. And the reason for that is because we've got like a little structure here, that first wave up there, and we want to get some overlapping with that, so that would tell us that we're on the right track. It would confirm that we've got three waves up here, because at the moment we can have 5 waves up here, which would be the 1, the 2, the 3 up to here, wave 4 to pull back here, and wave 5, and that would offer a bullish scenario. And it would also say to us that this wave 5 here is now in place, because after this would have an ABC here, and then we'll go further up strongly. So overlapping this 90 here and this wave 1 up here would confirm that. So yeah, so an A, B and a C here for wave D, and then an E wave back up to here and then down through here. So once again, a little bit like the euro, we're still waiting for this to unfold through here. That was yesterday. That's done and dusted. We've got those 5 waves down there, so this can be anything now. So this move up here becomes really important, this stage here as well. If I got another chart here, which would be, okay, that's a bit better. Let's drop that there. So you can see our little 5 waves down there that we're looking for yesterday, so that's fine. So this move up through here, this becomes the important one now, because if we do get a 5 wave structure through here, right, like that, then we're going to have an A and a B and a C, and then we're going to have another 5, which will take us into new highs here. If this move up here is just in three waves, then we'll see further downside from that. Now, it does appear that we've got 5 waves developing to the upside here. I'll just see, yeah, it should have here. Okay, this is just on the 5-minute chart, just looking at that move to the upside. So it does appear that we've got 5 waves as such. It's a little bit dodgy, but that would have to be 1 and 2 here. That would have to be the 3rd there. This is the 4th, being all sort of complicated, and obviously we're at close of session here, but this would be the 5th wave coming in here, making new highs here. So, and it may pop up there further, but the main point is that if we've got 5 here, then we need to be looking at some sort of counter trend here once the market volume flows again. And if that's the case, then look for support on top of group 1 here, the 91.30 from that point there. Yeah. So a test lower is good in 3 waves. If you can recognize that there are 3 waves here, then you know that top, wherever it is going to be taken out. And all you need to do is look for support, in this sort of area here. But you want it tested. Make sure it's tested, and then move in, and go from there. Because then we'll have a bullish picture from that point there as well. So, alrighty, well that's it. So, good morning, good luck, and enjoy the weekend ahead.